much do fluctuating mortgage rates actually impact you, and how is the Federal Housing Administration's new 40-year mortgage playing a role in combating rising interest rates? Find out today on today's episode of Rockin' Real Estate News. Welcome to Rockin' Real Estate News. I'm Alice Cooper, and I look forward to answering what's rockin' in Daytona Beach real estate. Today, we're talking about interest rates and how they might impact your purchasing power. You know, interest rates have a significant impact on a borrower when it comes to buying a house. It's a pretty well-known fact that the higher the interest rate, it's going to translate into higher mortgage payments, which then can limit the amount of money a buyer can borrow and therefore how much house they can afford. But have you ever thought about how even a minor shift in rates can impact your purchasing power? Throughout the past year, the 30-year fixed mortgage rate has fluctuated between 6 and 7%. And if you've been keeping up with rates at all, you've noticed that rates bouncing around and changing almost daily. So if you're thinking about buying a house, it's important not only to know the current rate, but to understand how even a minor shift in a mortgage rate can impact your ability to purchase a home. Let's take a look at the relationship between mortgage rates and a typically monthly mortgage payment. So here we see the principal and interest payment on a $325,000 loan at 6%, 6.5%, and 7%. Notice that even a 0.5% increase on an interest rate may increase the payment by like $100 a month and over $200 a month with a full percent. So you can see how interest rates have a big impact on a buyer's purchasing power. For many Americans, rising interest rates are taking their toll, and some have put off their plans to purchase. In response to the rising rates, the Federal Housing Administration just gave the green light for a new 40-year rate loan option. This means the monthly payments are spread over 40 years instead of 15 or 30, making the monthly payments much lower and at a fixed rate that won't fluctuate. Now, this idea is to combat rising interest rates by helping home buyers purchase homes with a more affordable monthly payment. And a 40-year loan option will become available starting this May. Supporters of this new 40-year loan option say that if it helps more people get into a home, then that's a good thing. The downside, of course, is if a buyer stays in the home for a long period of time, then they'll end up paying thousands of dollars more in interest in the long run. So it's really important to weigh out the pros and cons before you decide if a 40-year loan might be right. Bottom line, it's important to know your options. Understanding how mortgage rates impact your purchasing power and then planning your home buying budget around today's volatility is critical. Talking to a lender is your first step in buying a home so that you can get advice tailored to your specific situation and goals, and that pre-approval in hand is really going to make your buying situation a lot easier. We're happy to recommend a knowledgeable lender if you don't already have one. Until next time, rock on Rockstar.